Hello everyone and welcome back to my channel. Today we are going to discuss chapter 5 of Indian economic development, that is rural development. Here in this chapter we are going to learn rural development, its meaning and its significance. Then we are going to see lingering challenges of rural development, that is rural credit and agriculture marketing. Next we are going to see about agriculture marketing, especially in the marketing in the rural areas. So let's begin with the class, and here we are going to see each and every topic very thoroughly and in details. So don't skip up the video, listen to the video very carefully. I hope you can able to understand the full of the chapter. So let's begin. Rural development. First, we have to know what is the meaning of this word rural development. Rural development means an action plan for the social and economic growth of the rural areas. Now, the principal lingering challenges are challenging of rural credit and challenge of rural marketing. Next, also we can see the emerging challenges are the need for diversification of productive activities and also the need for organic farming. Now here what we can see that you have to note this point, that there are certain lingering and emerging challenges in the context of the rural development in India. The two principal lingering challenges are rural credit and rural marketing. And the two principal emerging challenges include the diversification of the product activities and also the organic farming. Now let us see the significance, or we can tell that the highlighted significance of the rural development in India. Now what are these highlighted significance? Let us see. First is the bulk of our population lives in the rural area, and this is loaded with abject poverty. Next, overall development of the economy would remain a distant dream unless it is aligned with growth and development in the rural areas. And also we can see that here the agricultural sector was ignored. Investment in the agricultural infrastructure was nowhere in the priority list. Next, we can see that the growth process of developed nation has been driven by the growth process of industrial sector. Now, here also we can see that the Indian growth story reflects the agricultural sector. This sector considerably lacks alternative means of sustainable living, alternative to crop farming. Consequently, we can see that with as low as 2% growth rate, the agriculture sector in India has emerged as an obstacle in the overall growth process of the economy. Nearly 2% of the growth rate in agricultural sector, contrasting with overall GDP growth of 7 to 8%, has created a structural imbalance. Here, structural imbalance means when the different sectors of the economy do not grow side by side. So this structural imbalance needs to be addressed. Next is what we can see, that rural urban divide has become extremely large, and it is a consequence of this divide that the country is presently confronted with the massive agitation by the farmers. So rural development is essential to reduce this gap. Next we can see that the next topic which we are going to discuss is that lingering challenges of rural development, that is rural credit and agricultural marketing. So what is this rural credit? Rural credit or agricultural credit means credit for farming. Here credit means the ability to borrow money with the promise to repay it in the future. It is often associated with some additional payment in the form of interest. Now, what is this need for the rural credit? Basically, there are two reasons that arises. Most farming families in India are small and marginal holders, producing just enough for their subsistence. the need for the credit therefore is unavoidable. Why? Because they seldom generate surplus for their investment. So therefore this rural credit is very much important for them. Next point is the gestation lag between sowing and harvesting of the crop is quite long. This compounds the needs for the credit to meet the initial investment on seed, fertilizer, implements, and some family expenses like marriage, death, birth, or other religious ceremonies. Now, there are three categories of the credit needs of the Indian farmers. First is short term credit, next is medium term credit, and third is a long term credit. Now, in the case of short term credit, what we can see that it is basically required for the purchase of inputs like seed, fertilizers, pesticides, and insecticides. Now, these loans are raised generally for a period ranging between 6 to 12 months. So, this is the case of the short term credit is required for just for purchasing the seeds, fertilizers, and all. And these loans are raised ranging between 6 to 12 months. Next, we can see medium term credit is also required by the farmers. Now, the medium term credit period ranging between 12 months to 5 years. Now, what is the need for this medium term credit? It is required to purchase a machinery, construction of fences, digging of wells. Next, we can see long term credit. The long term credit, this means the period of such loans ranges between 5 to 20 years. Now, this long term credit is needed just to purchase of additional land or for carrying out permanent improvements on the existing land. Next, we can see that evolution of this rural credit. This is a important one. You have to listen it carefully. At the time of independence, institutional credit show only a notional existence. Then we can see the non-institutional credit. Non-institutional credit was dominated by whom? By the moneylenders, traders, commission agent who charge exorbitantly a high rate of interest. And also it manipulates the accounts to exploit the illiterate farmers, because most of the farmers are illiterate, they don't know how to read and write. Therefore, exploiting them is very much easy for these non-institutional credit, for the moneylenders, for the traders and all. In fact, non-institutional credit often led to debt trap. Now, what is the meaning of this word debt trap? Debt trap means a situation where an individual or a company borrows money to repay old debts and in turn lands in a never-ending cycle of debt. Next, that means to repay one debt, you have to take one more loan. Again, to repay that loan, we have to take another loan. So that means that loan cannot be repaid in your lifetime. So it will be going on. Next, a significant change occurred in 1969 with the nationalization of the commercial bank. Next, we can see that it was then the concept of social banking was put into practice and credit needs of the farmers were addressed as a priority issue in the context of this rural development. Now, from where we get the sources of this credit, sources of the rural credit, that means from where we will get the credit. Two sources are there. First is non-institutional sources, or we can tell conventional traditional sources, and another is institutional sources. So non-institutional sources here, sources from what? Landlord, village traders, moneylenders, they are the sources. Now here we can see that non-institutional sources accounted for 93% of the total borrowings of the farmers in the beginning of the first 5-year plan. And institutional sources like what? Government, cooperative, commercial bank, regional rural bank. Here we can see that out of the total institutional credit, cooperative credit contributes nearly 15% and commercial bank it's about nearly 75%. Apart from the substantial expansion of the flow of credit by the commercial bank and regional rural bank, the cooperative credit institutions have emerged as important institutional agencies offering credit support and related services. Now let us discuss one by one. First is important institutional agencies that offer rural credit. First is cooperative credit society. Next is state bank and other commercial bank. Third is regional rural bank and land development banks. Fourth is National Bank for Agriculture and Rural Development. In short, we can tell that is NABARD. Now, we are going to discuss each of this institution one by one. Cooperative Credit Society. Now, the Cooperative Credit Society provide adequate credit to the farmers at a reasonable rate of interest. Here, like the non-institutional credit, where they charge an exorbitant high rate of interest, but in the case of this institutional sources, the rate of interest is very low, very reasonable. These society also provide guidance in diverse agricultural operation with a view to raise the crop productivity. Next, we can see that the cooperative credit society are to ensure timely and rapid flow of credit to the farmers, elimination of the moneylenders as credit agencies, spread credit facilities across all sections of the society. Next, we can see that the provision of adequate credit in areas covered by the special programs of development. Next institute is that State Bank of India and other commercial bank. The State Bank of India was set up in 1955 with a focus on rural credit. The government realized that rural credit needs could not be met by the cooperative credit societies alone, and that the commercial bank should play an important role. So that is why this prompted nationalization. Nationalization means the transfer of the major branch of the industry or commerce from the private to the state ownership control. And this was directed to offer the credit directly to the farmers as well as indirectly through cooperative societies. Next institution is Regional Rural Bank and we can say land development banks. These regional rural banks and land development banks were set up to promote credit supplies, particularly in the remote rural areas and other backward districts. These banks operate at the district level and are under the obligation to focus on credit needs of the weaker section of the population, rural population we can tell. Next is that the next institution is NABARD, which I have told you earlier. That is a National Bank for Agriculture and Rural Development. This is an apex institution handling policy, planning and operation in the field of rural credit and other related economic activities, and this NABARD was set up in the year 1982. There were various functions of this NABARD. First is that to serve as an apex funding agency for the institution providing the credit in the rural areas. Next is to take appropriate measures to improve the credit delivery system. The bank to focus on restructuring of credit institution and training of personnel. Next, to coordinate the rural financing activities of all the credit institutions and maintain a liaison with the Government of India, State Government, Reserve Bank and other national level institutions. Next, to undertake the monitoring and evaluation of the project refinanced by. Next, one more thing we can tell, the Reserve Bank of India. The Reserve Bank of India, if the rural credit system in India has acquired in present size and significance, it is essentially due to the key role played by the Reserve Bank of India. So, Reserve Bank of India, let us see that it focuses. The Reserve Bank of India has been playing an important role in providing credit to agriculturists and also strengthening the credit institutions, primary cooperatives, credit societies and land development banks in particular. So, this Reserve Bank of India focuses on short-term refinance facilities for agriculture and allied activities, development of cooperative credit institutions, expansion of the sources of fund for the short-term and long-term of the cooperative credit system, provision of long-term funds to bring about state partnership in cooperative credit agencies, then training and professionalization of cooperatives, conducting rural credit surveys to determine the coverage of rural household by credit institution, helping the bank branch expansion program to provide cheaper remittance facilities for banks operating in rural areas, and guidance to all concerned on matter relating to rural credit. So we can say that the role of RBI in the field of agricultural credit has been multidimensional through largely regulatory in nature. So from this point we also can able to answer that what is the role of Reserve Bank of India in rural credit. So if the question comes what is the role of Reserve Bank of India in rural credit, then you have to answer all these points which I have mentioned before. Next is microcredit programs and self-help groups. Microcredit means giving small loan to the individual and enabling them to become self-employed. Now, self-employed means working for oneself as a freelance or the owner of the business rather than for an employer. Microcredit program was started to help the people in underdeveloped countries who are not covered by any banking system. So this is the main motive for the microcredit program. Next, these programs are becoming popular among the small borrowers owing to their informal credit delivery mechanism involving the minimum legal formalities. In India, one such microcredit program is self-help group. Self-help group promote thrift, that means saving habit among the rural household. Small savings are mobilized by this self-help group and offered as credit to its different members depending on their need. By May 2019, nearly 54 lakh women of the self-help group with almost 6 crore women as member are operating across the different rural areas. So also we can see that about 10 to 15,000 per self-help group and another rupees 2.5 lakh per self-help group as a community investment support fund are provided as part of Renovative Fund to take up self-employment for the income generation. So these are the main motive of this microcredit programs and also the self-help group. So here also you can answer what are the importance of this microcredit and self-help group. Next we can tell rural banking, a few advantages and few disadvantages. So let us discuss about the advantages first. Rural banking in India has significantly expanded over time. The expansion has been significant particularly since nationalization of major commercial bank in 1969. Nationalization of the commercial bank marked the beginning of the social banking and personalized credit needs of the farmers. Here social banking means banking with the purpose of creating a positive impact of the society. Next is establishment of the NABARD, which is an apex body coordinating activities of all the financial institutions engaged in the rural credit programs. Then rural financing has become much more organized than before. Institutional credit has gone a long way in liberating the farmers about the debt trap of the Mahajans and the moneylenders. Institutional credit has promoted commercialization of the agriculture. So these are all the advantages of this rural banking. Now let us see the deficiency of this rural banking. First is that banking credit or the institutional credit has invariably been tied to collateral. Collateral means here the security or the guarantee of a property for the loans. Obviously, when you are going to take the loans, you have to give your property or something as a mortgage, because of which a large section of the small and marginal holders are often left out. So they cannot give their property in mortgage, so they have to be left out. They are not given any sorts of loan from these institutions. Owing to political populism, the government has openly showed laxity, that is lack of strictness in the recovery of the loans. Next we can see as a result, default rate has tended to swell or rise over time. Apart from the commercial bank, most financial institutions have failed to develop a culture of thrift, that means saving for the future, among the farming families. mobilization of deposits has remained rather subdued. Also, we can see that the social banking in the rural areas has taken a hit in the wake of the economic reforms of 1991. Impact of the debt of the farmers is generally becoming so huge the suicidal death are rising from scores to centuries. Particularly, we can see in the states of this Andhra Pradesh and Maharashtra. Okay, next we are going to see that agriculture marketing, especially the marketing in the rural area. First, we have to know what is the meaning of it. Agriculture marketing may be defined as gathering the produce after harvesting, processing the produce, that means separating the straw from the grains. Next is grading the produce according to its quality, then packaging the produce according to the buyer's preference, then storing the produce for future sale, and also for selling and distributing the produce when the price is lucrative. What is the main goal of this purpose? It does not simply refer to the farmer's act of bringing their produce to the market for the sale. Rather, it includes all those activities which help him getting the best price for their produce. What is this agriculture marketing? We can tell agriculture marketing is a process that involves assembling, storage, processing, transportation, packaging, grading, and distribution of the different agricultural commodities across the country. Next, what are the measures taken by the government to improve this agricultural this marketing system? First is regulated market. Regulated market have been established where sale and purchases of the produce is monitored by the market committee comprised of the representative of the government, farmers and the traders. Next, market system is made transparent with a strict vigil on the use of proper scales and weights. The market committee ensure that the farmers get appropriate price for their produce. Then provision of physical infrastructure. Physical infrastructure include the transport facilities, storage facilities and processing facilities. Better transport facilities like the roadway, railways enable the farmer to sell their products at locations offering lucrative price. Storage help the farmers to sell their produce at a time when the market price is lucrative. There is a need to increase the storage facilities, that means go down and cold storage. More than 10% of the goods produced in the farms are wasted because due to the lack of this cold storage. Cooperative agriculture marketing societies, the government is encouraging the formation of the cooperative agriculture market societies. As members of the society, farmers find themselves better bargainers in the market, getting better price for their produce through collective sale. Collective sales means related to the pool sales by the owners of separate units within a development and is often associated with higher prices due to increased bargaining power. Next is policy instrument. These include three components. First is minimum support price and is maintenance of buffer stock of wheat and rice by Food Corporation of India and distribution of the food grains through public distribution system that we are very familiar with, that is the PDS. MSP, that means the minimum support price, is an assurance to the farmers that their produce would be purchased by the government at a specified price. Of course, the farmers are free to sell their produce at a higher price than the MSP in the open market. Buffer stock and PDS, the minimum support purchases from the farmers are kept as buffer stock by the government. These stocks, that means of grains, are used primarily for the public distribution system beside meeting urgent needs during the period of low output and scarcity. PDS implies distribution of the food grains and other essentials like sugar and kerosene through fair price shops at subsidized rate so that the poor section of the society have an easy access to all these things. On the account of these measures by the government, agriculture marketing system has made some notable improvements. In fact, small and marginal farmers still continue to be the victims of distress sell to the rural moneylenders and commission agents. Surprisingly enough, nearly 90% of the agriculture marketing. Now, let us discuss with the next topic, that is emerging challenges of rural development, diversification of productive activities, and also about organic farming. Diversification of the productive activities. Now, here some of the possible option of this sustainable livelihood apart from this agricultural production: animal husbandry, fisheries, and horticultures. Now let us explain these activities one by one. First is animal husbandry. Animal husbandry in India, it's an important area of employment in India, different from crop farming. It is also called livestock farming. Now, animal husbandry means the science of breeding and caring for the farm animals. Here, poultry, cattle, and goats and sheep are important components of livestock in India. Poultry accounts for 61%, cattle and buffaloes 22%, goats and sheep nearly 16% share in the total livestock in India. In 2019, India had about 303 million cattle, including 110 million buffaloes. Next is crop livestock. In most areas, livestock farming is combined with crop farming by the rural families with a view to supplementing their income. This is known as mixed crop livestock farming. The notable feature of this crop livestock mix is that we move from irrigated areas to semi-arid and arid areas. The significance of the livestock farming tends to increase while that of crop farming tends to decrease. Crop livestock means a system of agricultural production which combine one or more crops and at least one type of livestock. Now, importance is that livestock farming in India is an important source of employment for the women. Presently, animal husbandry is a source of an alternative employment to nearly 70 million small and marginal farmers in the countryside. Over the last 3 decades, the performance of the dairy sector has quite impressive. Now, it's telling that during the period of 1951 to 2016, milk production has increased by about 10 times. Meat, egg, wool, and other byproducts are also emerging as important productive sectors for diversification. What are the problems that arise in this livestock? However, livestock sector is not free from problems. In terms of its size, our livestock population is perhaps the largest in the world. But in terms of equality, we are far behind from that of the developed countries. The two principal problems: first is a low productivity owing to backward and deficient veterinary care. Next, we can see there is an urgent need to bring the new technology for the promotion of good breeds of animal to enhance the productivity. First is that the operation need to be made for improved veterinary services and credit facilities to small and marginal farmers so that they can effectively take up livestock production and enhance their livelihood. Next, fisheries. Fisheries in India: West Bengal, Andhra Pradesh, Kerala, Maharashtra, Gujarat, Tamil Nadu are the principal states in India where the fisheries is an important source of livelihood in the rural areas. Interesting facts is that women are not directly involved in the fish production, though their involvement in fish marketing is quite substantial. Next, we come to the problems and also the solution of this fishery. Some of the major problems faced by the fishing community in India are rampant unemployment, low per capita earnings, absence of mobility of the labor in other sectors, and a high rate of illiteracy. Next is that these sectors also faces the issue from overfishing and population of the water bodies. Next, widespread indebtedness of the fishing communities make fishing a vulnerable occupation. So, credit facilities be provided to the fishing communities that breaks the vicious circle of indebtedness. Microfinancing through self-help groups may go a long way in redressing the credit needs of the marginal fishing families in rural areas. Fishery technology be upgraded and made available to the fishing community. Next, move on to this horticulture. Horticulture is another alternative source of employment in the rural areas. It is more like diversification of crop production rather than a source of employment different from crop farming. Horticulture in India, there has been a substantial increase in the area of horticulture. Horticulture contributes one third of the value of agricultural output and 6% of the GDP of India. Presently, India is the second largest producer of fruits and vegetables in the world. We are emerging as a leading producer of mango, bananas, coconuts, cashew nuts, and a variety of spices. Horticulture means the study or practice of growing flowers, fruits, and vegetables. Next is the importance. Horticulture is emerging in an important means of sustainable living in the rural areas. There has been a significant rise in the income levels of the farmer families who engage in this horticulture production. Shifting of the horticulture has reduced the economic vulnerability of small and marginal farmers. This has opened new avenues of the employment for the women folk in the rural areas. Enhancing the role of horticulture requires investment in infrastructure like electricity, cold storage system, marketing linkage, small scale processing units, and technology improvements and dissemination. Next, we see the organic farming. Here, organic farming is another emerging challenge in the context of rural development of the Indian economy. What is the concept of this organic farming? Organic farming relies upon the use of organic inputs so that we are able to restore, maintain, and enhance ecological balance. Organic farming is deeply linked with sustainable development. It minimizes the environmental degradation. In fact, organic farming and sustainable development go hand in hand. Here, the animal manures and compost are the basic organic inputs. Organic farming discards the use of all these chemical inputs, chemical fertilizers, insecticides. It is important to note that chemical inputs enter the food supply, penetrate the water sources, harm the livestock, deplete the soil, and devastate the natural ecosystem. However, it needs to be noted that simply discarding the use of chemical fertilizer is not organic farming. Rather, it is a system of farming that focuses on maintaining the soil health so that the farming becomes a long period sustainable process along with an eco-friendly environment. It may be noted that organic farming is getting critical support through the emerging demand of the organic food. In most developed countries, nearly 10% of their food system comes under the organic farming. To further encourage the sale of the organic food, retail chains and supermarkets are awarded with green status. Often, organic food command higher price of around 10 to 100% than conventional foods. Let us see the advantages of this organic farming. First, it discards the use of non-renewable resource. Unlike the conventional farming, organic farming does not use any types of synthetic chemical which are petroleum based. We know that the petroleum is a non-renewable resource. Next, environment friendly. Organic farming is environment friendly. Chemical fertilizers, on the other hand, pollute the groundwater by raising its nitrate content. Nitrate are the health hazards and pollute the environment. Organic farming discusses the use of chemical fertilizers. Next is sustains soil fertility. Chemical fertilizers, on the other hand, erode soil fertility. Accordingly, organic farming is conducive to sustainable development of agriculture, while conventional farming is not. Next, healthier and tastier food. Organic farming offers healthier and tastier food compared to that of the conventional farming. Recent studies have found that organic food is more nutritious than the food grown by using the chemical inputs. Existing trends indicates that demand for organic food is trending up even when high prices constraining factor. Next, we can see inexpensive technology for the small and marginal farmers. Organic farming offers an inexpensive farming technology to small and marginal farmers who constitute the bulk of farming population in India. Conventional technology is to be adopted as a package including H5E seeds, chemical fertilizers, pesticides, insecticides, beside good irrigation facilities. Next, what are the limitations of this organic farming? It cannot be denied that organic farming offers lesser yield and organic food as compared to that of the conventional food have shorter shelf life, implying that organic farming is not cost efficient. However, considering the fact that organic food are high in demand, higher product price is expected to compensate for lower yield.